Hello, welcome to the Outsider Club's Chart Wars. It's Sunday, April 6th. I'm Brit Ryle. This is Christian DeHaemer, also known as the Hammer, and we've got two charts and we're going mano y mano. And today, Christian gets to throw the first punch. Go ahead, Christian. Let me have it.
Well, Britt, as you know, the market crashed. We're down 10% in 2 days. People are asking me, what's going on? And I'm telling you, well, it was a surprise for all of us. Nobody thought we'd start a global trade war, and the market sold off. And so the question is, what do you do now, right? And so here, I'll share a chart with you, and we'll take a look at it. All right, you seen this chart?
Yep, got it.
All right. So the last big sell-off we had was back in 2022. You may remember we were going to head into a recession. The world was ending. I forget the specific reasons, but it doesn't matter for this. The stock market fell this long decline here, broke through all the trend lines and the moving averages. And at this point, people were panicking. What am I going to do? What am I going to do? Well, this is what you do. You wait patiently because, as we know, stocks bounce. And how much do they bounce though? And so like if you were holding here and you waited and the stock bounced, and then there's all sorts of hope on at this point. Oh, this was nothing. It's going back up. But the thing is, there's things called Fibonacci numbers. Now, Fibonacci, if you don't know, was an ancient Greek mathematician, and he also beat Templeton like for 10 years in a row in stock markets. That's a joke. Anyway, the stock Fibonacci is like all these logarithms, all these computers, these quants follow these numbers. Now, Fibonacci will bounce 23.6%, 38.2%, 50%, or 61.8%. These numbers aren't exact. They never exactly nail these numbers, but just keep it in mind. After a big sell-off, you'll get a bounce. And think about when you want to start fading that bounce. I always want to sell at about the 38.2, between the 38.2 and the 50%. I'll start selling. And that's what we're going to do this time. So we came down, we get a bounce, then we got another sell-off. And so here, where we were at the beginning or mid-February, we got a big sell-off, and then we got a little bounce. That was about a 20%er. And then we got another big sell-off. So if you do the math and you look at the numbers, you will see that we went from taking this sell-off from the second bounce where we are now, a 38% bounce from this level, 5074, where we closed on Friday, would be 5,344 on the S&P 500. And that's when I would start selling. And at this time, when this happens, when we get this bounce, people will say, oh, the tariffs don't matter. We'll get it back. Somebody will capitulate. Vietnam already has, but some other country will say, oh, we'll lower our tariffs. And you'll think, oh, maybe I should just hold. But don't. I'm not saying sell everything, but definitely start selling. Because it's very likely we're heading into a recession here. And that's my chart of the day. From wherever we bounce, we might not bounce on Monday, but we'll bounce Monday or Tuesday. We'll take 38% of that retracement, and then we'll start selling.
That is an excellent plan and very helpful, I'm sure, because, yeah, knowing what to do now is one of the most difficult things.
Having a game plan and working your plan.
Exactly. Christian, I've got a individual stock that investors should be looking at. It's Google. The stock is now officially cheap. The forward PE is 16 and the PEG ratio is just above 1. I think it's maybe likely that Google pulls back on its CapEx spending for AI, and that money goes right to the bottom line. In fact, its earnings estimates have been ticking a little higher through fiscal 2026, and I think that's why, is because analysts are anticipating Google's going to spend a little less money and increase their earnings per share. I also believe that investors underestimate two aspects of Google's business. One is YouTube, which is now amazingly almost as big as Disney. The movies, the theme parks, the streaming, all of it. It's pretty incredible just for YouTube. The second thing that investors are undervaluing about Google is its robo-taxi service, Waymo. The Waymo robo-taxi service is already up and running in San Francisco, Austin, Phoenix, and LA. It's coming to Atlanta right now and will be in Miami probably before the end of the summer. Waymo robo-taxi service has already logged 4 million miles of service. It's now hitting 1.3 million miles every single month. And that equates to 200,000 robo-taxi rides a week. You can see on the chart, this is a 5-year chart, the stock has already hit really important support level down around 147. If Christian's expectations of a bounce with S&P 500 come true, this is going to be a good move off of this support level. It looks attractive. Can't rule out a further move to the next support levels of 135 and 125. Really good for a rebound trade. And I think it's also time to start dollar cost averaging in to Google now and perhaps lower at 135 or 125. Long term, Google's going to be higher a few years from now, is almost unquestioning. So that's what I got for you. That's my chart. All right, gang, that is Outsider Club's Chart Wars for this week. It's April 6th again. I'm Brit Ryle. This is Christian DeHaemer. Thanks for tuning in, and we'll see you next week.
Later.